NVIDIA, the biggest driver of returns among the Magnificent Seven since the market rout just the other week. But shares are under pressure today, down about 0.6%, though NVIDIA is still up over 40% from its August lows, adding over $500 billion to its market cap in just 3 weeks. Joining us to discuss the next big catalyst for the chip giant, we've got Dan Niles. He's the founder and portfolio manager at Niles Investment Management. Dan, it's great to have you on here. So obviously expectations for NVIDIA are high heading into the next print, and this comes after their EPS growth was over 400% in the first quarter. Can they beat that again?
Yeah, I think for the quarter, everybody's expecting them to beat revenues and EPS. The real question really comes down to more of the guidance in terms of how it reacts in the near term. I think, though, if you take a step back and you think about it from a longer term perspective, if you think back to the internet build out, and you can start that at the end of '94 when Netscape Navigator showed up, you had Cisco really drive the infrastructure build out for the internet at the time. Cisco never had a down quarter sequentially in 6 years. And the stock was up over 4,000% from the end of '94 to its peak, and revenues were up 15.5 times. If you look at NVIDIA, we're only 6 quarters, not 6 years, into the build out since we heard about this thing called ChatGPT and generative AI. And the revenues are up 4.5 times, not 15.5 times like it was for Cisco. And the stock is up 600%, not 4,000% like it was for Cisco from the end of '94 to its peak. So yeah, the stock may go down after they report because obviously we've heard about delays in Blackwell. Their 3 biggest customers, Microsoft, Amazon, and Google, all 3 of those stocks went down after they reported results. They all talked about spending a lot of money, maybe more than they needed to in the near term. So the quarter itself, it could be messy, but if you think about it from a long-term perspective, I think we still have several more years to go. I think the revenues will double over the course of the next several years, and I think the stock will as well.
So the real question here is how this stock is likely to behave after earnings are posted. As we can see here, there was a 4% decline on average within all of the Mag 7 stocks after they reported earnings. And if we look back to those earnings reports, most of those figures, not many of those figures were not negative. There were some instances of downside guidance projections and things like that. But for the most part, those were relatively stable earnings. But at the same time, we did see declines of 4% on average for all of these stocks as a group after they reported earnings. So given the fact that the stock is currently rallying into some fairly significant resistance levels, it is clear that there are some near-term risks, and investors should be positioning here for a bit of a retracement rather than an excessive pop further, which is what we saw after NVIDIA's last earnings report. So if we are looking to the downside here, one level that I'm watching does come in right around this 120 level. This is an area of prior historical resistance that would now be expected to work as support. And then in addition to that, as we can see here, this rising 20-day exponential moving average is starting to come into direct contact with this area. So I would expect to see at least a retracement into this area, even though we have recently now broken above this prior descending trend line.
So Dan, it sounds like you're still, or you would be a buyer here then at these levels.
I'm not a buyer here at these levels. I mean, if you look back at what we were saying, what we said going into this earnings season, we said we thought there would be an issue during earnings with the Magnificent Seven in that you'd have to start rationalizing AI spend because you weren't generating the revenues you needed. And so for us, if you look at the 6 Magnificent Seven stocks that have reported so far, they've been down on average 4% the day after earnings. So with this massive ramp up, you talked about it earlier, right? This will be the 9th day in a row the S&P's up. It's the longest streak since 2004. I wouldn't necessarily be pushing that into an NVIDIA print, but I think if you're not worried about what happens the day after and you're thinking about this over a multi-year period of time, it should be in pretty good shape. But as we've seen, the market's really volatile, and when you've got big companies like Microsoft, Amazon, and Google, where the forward revenue numbers are coming down, not up after they reported, and they're the biggest customers for NVIDIA, and an NVIDIA chip is late, I wouldn't necessarily be messing around with it for the quarter itself. If you're thinking long term, yes, you can be a buyer.
So as explained in the prior video for NVIDIA Corporation, there are some near-term risks that are centered around this stock. This does not mean that the longer term trajectory for NVIDIA is expected to be lower. However, we are headed into an important earnings risk here. And with the stock rallying higher, like the rally that we've seen in recent trading sessions, there is some expectation here that we could start to see a bit of a downside retracement before we're actually able to see another leg higher. As things currently stand, we're looking at price highs coming in at 130.75. And as this has happened, we have actually started to break this downtrend line that I've been pointing to in prior videos. So here are some issues from the technical perspective that are likely to continue to influence the stock in the near term.
Dan, put this in perspective for our viewers, because so many people have talked about the fact that NVIDIA could be the next catalyst here for the markets. This is the thing to watch. When you stack up NVIDIA's results next week, compare that to what could come out of Jackson Hole here on Friday. What is the bigger catalyst to the market in your view?
Well, I mean, the long term is always made up of a series of short-term events. So I think you first get through Jackson Hole. I don't think it's hard to believe that Jackson Hole will be anything but positive in terms of rhetoric, because these central bankers, remember, 2 weeks ago, you had the Nikkei down, which is the Japanese stock market, 12% in one day. The US stock market was down 3% in a day. And that's not that long ago. So they're going to want to be very calming and soothing and talk about the pace of rate cuts, not whether it will happen, and talk about the support that they're giving to markets. And so I think that's going to be positive. And then you obviously on August 28th, you get the NVIDIA results, and that specifically is going to focus in on where are we in this AI trade. Because I do think, sometime next year, you're going to go through a period of AI digestion once the Blackwell chips ship, because you've heard different companies saying the risk is underspending right now on AI, not overspending, which tells you that they're spending more than what they think they need because their forward forecasts for revenues are going down. So at some point, you're going to go through this digestion phase. And for the viewers who don't remember these same customers caused NVIDIA to pre-announce negatively in the early part of 2022 because these same customers were going through a digestion phase at that time as well. So this isn't going to be straight up and to the right. I mean, even with Cisco, that stock was down 38% intra-year in 1997 from peak to trough. It was down 37% in 1998, peak to trough. It was up each of those years in full, but you had some horrific drawdowns as you were going through digestion periods or other macro events. And so you should be willing to deal with that in NVIDIA and expect that to happen.
The parallels here with Cisco are quite interesting because Cisco is essentially the NVIDIA of its day. In terms of the overall internet build out, Cisco was a key player. And at one point, Cisco was the most valuable company in the world. I think that this is a stock that people have really forgotten about at this point, even though it does still trade. And it's an interesting technology stock because they actually even pay a dividend. So, it is still a major player in the market, but it's really kind of fallen off as far as popularity is concerned. But the overall sentiment here is the idea that there can still be some significant periods of drawdown, even if the longer term uptrend remains intact. And then in addition to that, you have these points about how the next near term NVIDIA performance is likely to affect the overall market, given the fact that this stock is now becoming such a large component within the broader market, within the technology ETFs, within the broader market ETFs and things like that. NVIDIA performance obviously directly affects, most of these major technology companies and a large portion of the Mag 7 as well. So these are all very important points that investors will need to take note of as we head into NVIDIA's earnings report.
So what does that mean in terms of investor positioning, Dan? I get it that you are kind of bearish short-term, bullish long-term on NVIDIA. What portfolio management does that initiate for investors listening in terms of capital allocation there?
Well, I think one of the things that we've done is we've broadened out what we own. So if you're in an environment where rates are getting cut, I always look at it and say, what can I do where I benefit from the big macro trends? Well, the one thing pretty much for certain is that rates are going to come down across the board. So what companies will that benefit? Well, financials is one sector. Consumer staples, obviously with the big dividend yields that they have, is another sector. Telecom services is another sector where you've got big dividend yields, and those look a lot more attractive when rates start to drop. And so I think, right now it's been tech 24/7, AI all the time, But don't forget that that trade is getting a little longer in the tooth, in the sense that if the biggest companies in the world, like an Amazon, like a Google, like a Microsoft, all which are big AI players, had their forward revenues for the September quarter cut when they reported June, despite all the benefits from AI, then you may want to think about, because over the long term, earnings is what drives stock prices. You may
Right.
want to think about other sectors that have been just sort of left in the dust, the other 493 stocks in the S&P 500, because those are going to benefit in a rate cutting environment with an economy that is slowing, which is what's going on right now.
Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.